Hi traders, welcome to your daily update for Thursday the 26th of March 2015. And overnight we've seen a little bit of a range bound market. We had the US dollar quite flat to under a little bit of pressure. We also seen the Great British Pound consolidate quite tightly, and the Euro actually made a run for another test of $1.10, which is quite interesting, and it's trying to break through this level a few times now, and should it break above this in a convincing manner, we could see it move longer to $1.11, $1.12. So it's quite interesting to see that we were once looking and talking through in the media about the euro becoming parity with the US dollar, but after a 450 pip rally, I guess a lot of those predictions from Morgan Stanley, who had 75-cent target on the euro, to be now reconsidering all their brash calls back in when the market was all doom and gloom. So with the quantitative easing possibly adding to an improved data from the Eurozone in coming months, we could see some support for the euro, and I believe that we may break above $1.10. Let's have a look at the calendar and see what we've got coming up. There's not a lot into the European session, as you can see here. We do have retail sales out for the Great British Pound, and I believe this is going to be the deciding factor on the Great British Pound versus the US dollar's triangle pattern that it hasn't been able to break out of. Later on in the night, we do have in the US session some jobless claims, and that data is going to be quite important as well. So we'll have to keep an eye on that, along with the market services and composite coming out later on. So those PMI data, that's going to be the key. Other than that, there's not a lot of key data. I think for the US dollar, the market's really waiting for next week's Tier 1 data to come out before they start really pushing the US dollar around. So until then, we could continue to see some consolidations. It seems to be what has been the focus for the market, and I think that trend is going to continue. All right, so there's not a lot of data. Let's have a look at the US dollar index, and as you'll see, it's under a little bit of pressure, but the selling is really consolidating, and I am expecting to potentially find some support around this region. You can't say when, and it's hard to predict. However, let's keep an eye on it. And I think next week, as I said, when some Tier 1 data comes out, we will see some pretty big moves there. Unless tonight's data really shocks the market, or some other comments from other Fed ministers really shock the market as well. Let's get that out the way. Let's have a look at some charts here. And we'll go to the New Zealand as usual now. I mentioned yesterday how they had very weak data in terms of their exports, and their data miss has definitely been reflected in the currency pair. And as you can see, we did see the weak US dollar in the initial part of the session push it higher, but it has failed, and we've started to make new lows here. So the candle formation and everything I was chatting about yesterday did come to fruition. However, I don't expect these losses to continue quite heavily. And if you've taken the trade and you look to take some profits in the near term, it could just test the back of this downtrend line, and we could find some support here within the 75-cent area. If we have a look at the Australian dollar, it's a very similar story. It did get sold off. This is a bearish pattern, but once again, I think we will find some support in the 77-cent area, and possibly 78 cents could potentially offer some short-term support if we continue to see some US dollar weakness. All right, so the Great British Pound's an interesting one. We have still consolidated. It's struggled to break above the $1.50, which has been a very key level. Tonight's retail sales, if they come in weak, I think we'll get a breakout to the downside. It would have to be a very outstanding, surprisingly good result for it to push above $1.50. So I'm still favouring the downside. We'll have to see what comes out of that data. And I'd be very surprised if any major moves happen prior to that. If I get a 4-hourly chart for you, you'll see the pattern a lot clearer. And you can see there that we are just consolidating. So we really want it to a weak data, and for it to get below $1.48 to really suggest that momentum is on the bear side, and we can continue to see this triangle pattern play out and move to some lower areas. And although the resistance level here has continually been in the high 49s, I think $1.50 even is the is the key level, and if we do get a breakout, we could just find resistance at this historical downtrend line at $1.50, and it could be a false breakout. Just got to be careful of these things. Keep an eye on that and momentum, and as always, the US dollar seems to be still in focus, so keep an eye on that dollar index chart. The US dollar CAD sold off. We did have some reports last night, and it came out that there has been a large storage of oil, and that is not unknown to the market, but it's the first time that it started showing up in the data, and it started to rally. And we've seen that the US dollar, the US versus the CAD will actually get sold off as the the US will actually get sold off as the Canadian oil prices go higher. We also had reports that Saudi were bombing Yemen, and that will also add to the oil price. Let me duck over to the oil price and I'll show you exactly what I mean. And as you can see here, the oil price on a daily chart has skyrocketed. I'll go to a 4-hourly chart and zoom in for you. You can see here with the news that the Saudi have been bombing key targets in Yemen. We've made a big run up to $52 a barrel, and that is only going to support the Canadian dollar as oil prices have bounced, and that's what's weighing down a little bit here on the US versus the CAD. So I'll have to keep an eye on that. Of course, oil could actually fall back down again should those reports be very unsubstantiated in terms that the Saudis aren't bombing oil targets and the bombing isn't going to restrict oil supply to the market. And then I think that weakness could come back in. So keep an eye on the news wires for that. The US versus the Japanese has come under immense selling, and we've broken through support and it looks like it wants to make a run for $118. And I think we will find support there. This is on the back of weak bond yields and also some information out of Japan. I think we are just consolidating, and once again, next week we could see some Tier 1 data offer some support to the US dollar before the bulls get in. We'll have to keep an eye on that. But for now, going long is definitely not the answer. I don't think we should be catching a falling sword. Let's just wait and see what the data comes out. But scalp it to the downside and see if we can make money as it continues to fall. So the Asian session, it really sped up. All right, guys, that's it for me today. Good luck out there trading. I'll be back again tomorrow for this video. And until then, trade well.